Hello, everyone, and welcome to another episode of TA and Chill. I hope you liked the last one. This time I've fixed the aspect ratio, and I hope the microphone is good enough, or adequate at least. So I'll try and keep this video to under 10 minutes, but I can't make any promises because I tend to get carried away with these things. So um, in this video, I'm going to talk about two main things, primarily with respect to GameStop. So in the first half of the video, we're going to have a case study of the last run from $210 approximately to 255, and ask ourselves a few questions about it. So what could we have done differently if we played it wrong? How could we have anticipated it? And if we missed it, why did we miss it? And how, as you can tell from the chart that I have on screen now, um, how could multi-time frame analysis have helped us capitalize on the move? In the second half, I'll expand a little bit more on the indicators that I'm using and perhaps what's coming through GameStop overall. And if I get things a little bit mixed up, do forgive me. I haven't got an exact script here. I've just got some general notes. So, uh, and a more sort of general point. I was watching Edge of Tomorrow the other day with I think it's Tom Cruise, and it reminded me of trading. And the reason that I say that is because every day is the same, and yet each day you have the choice to do things differently and act differently. And that's just something that I really like about trading. So with that said, let's get into it. So why do we do multi-time frame analysis at all, and what kind of time frames are we even looking at? Well, it depends on the length of time that you're interested in investing in something. But as a rule of thumb, I quite like the 30 minute, the 1 hour, and the 4 hour, as you can see on the on the chart here. So let's start with a quick multi-time frame rundown of GameStop so that we have a snapshot of the overall trend. And to do that, I'll start out with Ichimoku. Now, you don't have to be, I know it looks very messy, but you don't have to know very much about it to understand the points that I'm getting at here. So we have the 30 minute, the 1 hour, and the 1 day. And you'll see how my cursor is synchronized across all three windows so that we have a real sense for what short-term price action looks like compared to type of price action over the longer term. So we have 1 day here, 1 hour and 30. So let's talk about yeah, the general trend on GameStop, and starting with the daily chart. You can look at these clouds as simply zones of resistance. They're called Kumo in Japanese. And on the daily chart here, going back to the beginning of 2021, you can see that this is a very, very strong uptrend that has battled through a lot of resistance despite its parabolic run. Most assets would um, not be capable of running a second time like this. It passed through the clouds again in May, had a death cross in June, passed under the clouds, but it's maintaining this very high price level. And most recently, at the beginning of November, it crossed over above the clouds again. So the quick rundown of this is that obviously GameStop is very, very bullish. And let's look at the lower time frames here and look at what's been happening in the last week or so. So there's I was looking at this most recent run from 210 to 250, and as part of auditing myself, I wondered, what could we have done differently? Um, so broadly speaking, yes, it's in an uptrend on the very high time frames, and similarly on lower time frames. But what would have alerted us to the fact that something big was coming for GameStop? Well, in Ichimoku you have things called golden crosses and death crosses. Pardon me. And so on the 30-minute time frame here, and that probably is the time frame you would have to be looking at in order if you wanted to jump into this quickly. You would have seen that it was above the clouds here on the 30-minute time frame and emerging from the clouds on the 1 hour time frame, and you saw a cross at 9:30 on November 17th, uh, November 18th there, and you saw that the lagging span, which is just price action set back 26 periods, had also broken out above price action, which implies that there's little resistance um, above you. So that helps to validate the overall trend, which is really important. And a lot of people turn it off, and they really shouldn't. So in terms of Ichimoku, yeah, the breakout was quite clear. Simply, it was just above the clouds, and you had a golden cross here, and this was part of on the daily chart being part of a broader bullish trend, albeit on um, fairly slim clouds, even though they are bullish. So with Ichimoku out of the way, let's go to the more standard indicators. So Ichimoku is just great for like understanding trends at a glance in a snapshot. I think in Ichimoku Kinko Hyo means equilibrium at a glance in Japanese, and that's really what it's great for. So don't, although it looks very, very messy, it's actually very, very simple. So now that we've established what the broader trend of GameStop is, um, let's look at some more technical, uh, more sort of standard Western technical indicators to kind of establish what happened in this last run here, and what could we have done differently. So on these indicators, you'll see a something very similar to what happened on Ichimoku, but it's being presented in a different way. So while on Ichimoku you had a golden cross here, uh, in with these indicators, so those being Bollinger Bands, standard, 179 period exponential moving average, thanks to Tradespotting for that tip, and RSI-RMA, which is tweaked slightly so that we focus on it being simply above 55. You can tweak your own indicator to show something similar. And then we have probably one of my favorite indicators, which is the DMI here, which shows you the overall trend. So let's analyze it just quickly. We'll go for the 4 hour on here. So recently, what's been going on in GameStop? Well, you had a positive cross here on the DMI. So that's DI plus is the lime green line here, and that tells you that the bulls have generally been in ascendance. They've been in control since October the 22nd here, and the bears DI minus here haven't been able to push higher. And the trend overall has been more bullish than bearish. It's been above 50. It's been above 50 for the majority of that time, and also DI plus has been above 38, which is a good point for validating the strength of a trend. So with that in mind, let's look back at the most recent run from 210 here, and what that looked like across different time frames. So firstly, we just want to ask ourselves the question: Is this trend even bullish to begin with? Is this worth something that's worth getting into? And I find that a good filter for that is just looking at this 179 EMA and asking yourself, is it above it or not? If it's not, perhaps you should wait until it until it is above that, because otherwise you could be trading into a downtrend and going long into it. I mean, if you want to go short on things, then you'd be doing everything the opposite. But if you want to trade long into things, then it probably needs to be above that. Although most people use the 200 SMA, but let's go with the 179 EMA for now. So on the 30-minute time frame, you could see that it was hugging the 179 EMA back on November the 15th, um, and it looked strong on the 4 hour. I mean, it's been above the 179 this whole time, but it only strongly moved above that on November the 19th. Let's look at it on the 1 hour here. So the the characteristic you're looking for really is for two time frames to be two, or even ideally three time frames, all three time frames, um, to be congruent with each other and telling you um, approximately the same thing, that this trend is this trend is bullish. So the 30-minute would have told you things are looking good, things are looking strong in the short term, but you would have probably wanted more validation, more confirmation than that. So you would look up to the 1 hour here, um, and yeah, potentially the 4 hour here as well. So you knew that the general context was bullish, and the bulls are generally in control. So you wouldn't be going short into something like this. But to enter it, um, you'd be mainly looking at look at the Bollinger Bands here. If you don't know what they are, put simply, constriction tells you that the constriction of the Bollinger Bands tells you that we're in a period of very low volatility, and you can probably guess what happens after long periods of very low volatility. Is that you get periods of very high volatility, so breakouts in other words. And in a breakout, you'll see that price action sticks and traces along the top of the Bollinger Bands here. And one of the characteristics of this trend ending is that it peels away from the Bollinger Bands, which is 2 standard deviations out, and is unable to hold it up there. And as you can see, that's what happened with GameStop. So approximately you could have entered at maybe 210, 212 down here, because it's crossed the baseline here. You got some constriction going on, so you know that there could be some volatility coming up. Let's refer down to the RSI-RMA here. You just want it to be above 55 to validate that there is a strong trend taking place. So above the Bollinger Band center line here, and above 55 on the RSI-RMA here. And then you would have been able to, and then I've also got PSAR here, so parabolic stop and reverse. That's the small dots here. That's great for telling you when trends are ending, and for also setting stop losses by. So you would have entered at 210, kept some tight stop losses on there. If you were feeling creative, arguably you could have used Ichimoku to do that, because as you can see, the red line here, or the Kijun-sen, so the medium-term support line, you can think of that as, also doubles up as a place to set stop losses by. In such a violent parabolic move, though, it can be helpful to just look at price action breaking the short-term support here, the Tenkan Sen, because that's the shortest period on Ichimoku. But back to the regular indicators. So you saw that up here trend is maxed out. This is the ADX here. So when it reaches 40 is like a lot of trends will reverse at 40. If it does continue after that up to 60, that's really extreme. So you can look at 8 or 9 down here being, it's quite rare for trend to get that weak. That would really be, there's no trend whatsoever. Certainly on the ADX, like the DI plus or DI minus often will go down there, but the ADX as a whole doesn't tend to, because the ADX is an average of both of them. Won't get down there. So the trend maxed out at 60. Peeling away from the Bollinger Bands, crossing the center line here. There's no reason to stay in the trade at that point. I mean, greed kills and all that. So you'd have exited. You would have exited there from 210 to approximately 240, depending on your risk tolerance and where you set your stop losses. So let's just summarize what the characteristics of a run like this are and how we identified them. So number one, asking yourself, is the trend bullish? Is it above 179 EMA on 2 time frames? Use the correct indicators, so Bollinger Bands, RSI, EMA, DMI, ADX. And another exit indicator that you could have used to maximize this move is the RSI-RMA here. Once it's chopped through it to the downside here, up at 76, I think you could take that as being the red light or the green light for the trend to end there. So now that we've looked at this previous run, what's coming up for GameStop in the very near future. And to do that, let's look at it on the 1 hour and the 4 hour here. So it's crossed over the Bollinger Band center line here. You can see that trend ADX is weakening here. ADX, no, not that one. Yeah, ADX here is weakening. So the bulls were in control here, and ADX is telling you that the strength of the trend was increasing, and now the strength of the bullish trend is weakening, and it's crossed below this center line. So that really tells you that at least in the short term, the bears are back in control. So where could you look for support in this? Well, let's move up to the daily. As you can see on the daily chart, we are looking like we're just about to cross this center line, and the positive strength is waning there. So we can look towards our next levels of horizontal support. And here's a fun tip, or I think it's rather fun anyway. If you haven't used Renko candles before, they look a bit like Space Invaders, but what they do allow you to do is draw in lines of support and resistance very, very easily. So you can just snap on your lines of support and resistance there, where you can expect price action to at least pause. So going back to the normal candles on the daily here, the next major supports are 200 if we cross over this center line here, which is looking pretty likely as this trend has been turned away at 40, which is normal, and the bears are climbing up back here, back into control. So if we cross over the baseline here, you could probably expect another trip to the bottom edges of the Bollinger Bands down here over the coming, let's say, 1 to 2 weeks. So the next stop would be approximately 200 here. That's one line of support. And then below that, approximately 180 or 170 down there. So I hope that was, I know that was a little bit rambling, but in summary, these are the things that I'm looking for when I'm trying to get into a trade. This is what's going on with GameStop right now, and I'd be really happy to answer any of your questions in the comments. Feel free to hit like and subscribe if you if you like this content. And I'll be sharing it on Twitter, and I hope to see you guys over there. Thank you very much for your time.